Anyway, before we can get into all the excitement, I did want to do a little educational piece here on short squeezes. While a lot of people may understand at the surface, what a short squeeze is and what it means for a stock to be short squeezed, I feel that the intricacies of it might not be completely understood. So, wanted to touch on all this briefly. Here we go. First of
You got
all,
a funny accident, man.
if everybody's fine, I could think that it's funny. Um, Short squeezes happen when a stock's price rises sharply, forcing short sellers to rapidly exit. And when you short something, you sell to open it. You're hoping to buy it back later at a lower price for a profit. So you must exit with buy orders. So when a stock goes shooting upward, people have to exit with buy orders for a loss. And therefore, they also become buyers of a stock that is already rapidly rising, compounds that bullish price action. The more short pressure that there is, the more exaggerated and sometimes unprecedented that this effect will be. Obviously, we all remember January of 2021, GameStop, AMC, BlackBerry, all that good stuff, moving all at once, and that's because of how heavy the short pressure was in those situations. Short squeezes happen because, as I just said, yeah, short sellers sell to open on stocks they believe are going to take a big decline in price. Anything can happen to pump that stock price up: positive news, product announcements, earning beats, public sentiment, Wall Street bets, whatever it may be. And if the price holds higher and the expiration date on short options gets closer and closer, eventually short sellers have to buy to close and cut their positions. And this starts a whole snowball because the stock's price is already moving higher. Short sellers are already losing money. And when every person that buys to close, the price gets driven higher and higher, forcing more and more people to buy to close. And this is no different than panic selling. It's the opposite of panic selling. But panic closing,
Panic closing.
yeah, as a whole could encompass both panic selling and a short squeeze, which is just panic buying back to close your positions. It's all that it is. The higher and higher that the price gets driven, the more and more shorts have to buy to exit, and the higher and higher the price goes, and the cycle repeats itself. And so, much like if you could somehow be bearish in a time of panic selling, you would make a ton of money. If you can be long in a time of heavy short pressure and a short squeeze happens, you can make a lot of money. But as with anything else in the trading world, there is great risk and reward associated with both sides of that coin. If you're contrarian and you want to try to, buy things with strong short pressure in anticipation of a squeeze, there's heavy pros and cons to that. The rapid rise in price is attractive, but anything that's heavily shorted is heavily shorted for good reasons, and these firms win 99% of the time. They find a way to win. And so when all of the firms with their ample algorithms and 100 highly paid individuals checking out a stock are all in agreement that this is probably a good stock to short, you usually are not going to be too smart to fade that. But obviously, it does happen from time to time. You should look at it as playing the lottery, though. If you are going to try to be contrarian and constantly be loading on things that all of the firms have billions and billions of dollars in short pressure on, look at that as buying a lotto ticket, because 99% of the time you're going to lose. You're spinning a slot machine, more or less. And in January of 2021, we got some jackpots, but they are few and far between. So if you're going to try to, time the short squeeze, do so with great caution and attention to detail. And when I say attention to detail, it's because it is possible. You can time these things up, but you don't want to just be like, oh, stock have heavy short pressure, I buy. You want to find stocks with heavy short pressure, meticulously track them over the course of weeks. And if you start to see some bullish sentiment building that you may think will lead to shorts dumping, that's when you want to sort of try to slowly, ease yourself in. But don't just find a list online of all of the most heavily shorted stocks and start buying them, because you'll lose. And then our last bit here is naked short selling versus short squeeze. Naked short selling, which actually is something that I didn't really know how common it was for this to take place, but it's short selling a stock without first borrowing it from somebody else. Usually when you short a stock, there is when I say borrowing it from somebody else, usually it's the brokerage that you're dealing with. But somebody has to buy the stock as collateral for you to be able to short sell it. And then that's why your broker incurs the risk if you short sell. And that's why you need a margin account with certain approval. And if you get margin called, that's because you owe your broker money, not because you owe the market money. You didn't just sell this stock out of air. The broker bought this stock and has sold it, or you've sold it on credit. And if you are not borrowing it from anybody else, then that's naked short selling. So it's the selling of shares that are not affirmatively determined to exist. It's illegal per the SEC, but it still does happen a fair amount because of discrepancies between electronic and paper trading, and especially at high levels with these big firms that are trying to short sell, thousands, tens of thousands, hundreds of thousands of shares at once. Sometimes some of those shares do not directly exist, so to speak. And if a squeeze does occur, then any naked shorts that exist really exacerbate the effect of it because they're basically unaccounted for shares, and now unaccounted for money has to get pumped back into the market, and it pumps it up even further. So yeah, illegal per the SEC, but as with anything else that is illegal per the SEC, the winningest firms are doing that shit. So anyway, that concludes our little segment on short selling here, and